It's simple, but the realization that I've had is that we have a broken customer acquisition funnel. The problem is everyone that comes to the crypto industry, economy, come through one source, one venue, and that's called an exchange. The problem is you can't expect to sell people a life insurance product when they walk into the casino.
My name is Mia, and you're watching Proof of Talk, a short series of podcasts where I'll be interviewing the leading founders and investors in crypto. All interviews are unscripted, meaning the guests have no idea what I'm about to ask.
Proof of Talk.
I'm in Dubai, and today we are with Santiago Santos. It's great to have you on again. You were one of the most mentioned guests that I had throughout the past year, and I had a lot of guests. So
I was going to say, like, how many guests do you have? It was like 2 guests.
No, it was like 200 episodes or more that I recorded last year.
That's
It wasn't with the Proof of Talk. This is the new series. But yeah, it's really good. I felt like we could have covered like way more. Although like people were happy with what you said there. Is there anything that you've been paying attention recently that you feel like people are not really paying much attention to right now?
Yeah, no, well, thanks for having me again. It's great to be here. Hopefully, I live up to the sequel being better than the first one. I have been thinking a lot about this nagging question of like, why don't we have more users on chain? Mm-hmm. Like, you hear everyone say kind of the same narrative, something along the lines of this is really interesting technology, whether it's going to fit and transform AI or payments or, you know, governance and political systems, but by and large, like payments and the way we coordinate a species, like all these narratives sound phenomenal and great. Problem is, most of the world kind of just looks at us and says, it's just a casino.
Yeah.
Like show me how this technology that you talk about that fits into my daily life. And mind you, the internet had this problem too. 2001, there's a fantastic interview with Bill Gates on like a talk show in New York. And the host is, mind you, 2001, so not too long ago. Mm-hmm. And they're asking him like, why are you dedicating your life to the internet? You just had the dot-com crash. Every business went out of, like most businesses kind of crashed.
Yeah.
Why is the internet so important? He's like, this will be the most impactful revolution. This is the most important thing. And everyone laughs at him. And very quickly that changed. But there were a couple of really key things that made, mind you, at the time, the internet was not relatable. Like you didn't have email. You didn't have really good internet. You didn't have devices. The form factor was off. Like it was very big computers. They were expensive.
Yeah.
So almost like you have to go and study history to understand how the evolution of this industry is going to go. So for me, it's like the key question maybe we can cover in this pod is like, why don't we have more users? If we truly built really groundbreaking technology, why is it that, mind you, we've been on this for 12 years. Why don't we have 1 billion users on chain? Why are more people not using stablecoins or your flavor of Deepin project or AI or whatever? And the classic response to that would be something along the lines of, UI UX has been an issue, largely solved. A lot of these apps are really good, really easy to use, no different than a Web2 app. So regulation, okay, well that's going away. What else can you point to as to why we don't have more users? So you go down this list, and it's like I've just obsessed about that since I joined the space in 2012. And it's simple, but the realization that I've had is that we have a broken customer acquisition funnel. Speculation's great. It catches the attention of people. People want to make money. They want to improve their condition. It's a very powerful activation energy to get people to do something. What happens? But the problem is everyone that comes to the crypto industry, economy, come through one source, one venue, and that's called an exchange. And so that's fine. The problem is you can't expect to sell people a life insurance product, a savings product, when they walk into the casino because they're not thinking about that. Like you can't sell them a mobile plan that is crypto enabled like Helium because you're going to the casino.
Do you think the standard person feels financially confident to use this stuff?
Excellent point. So, no. By the way, financial literacy is never going to improve. People just don't know how money works. Unfortunately, our educational system does not teach you. They teach you calculus, but they don't teach you how compounding interest works or how to like save. So that's just like from an investing standpoint, I never want to assume that I'm going to change consumer behavior or habits. think about it, there's only very few companies in the history of humanity that have been able to do that. Apple, probably the most impactful one, because they told you that you are going to need this.
Yeah.
And Steve Ballmer, who was the CEO of Microsoft and Nokia, and everyone else laughed him out of the room. And lo and behold, everyone in the world now thinks of this as an extension of their body. You can't live without the iPad. There's only very few companies that actually design and produce products that you didn't think you wanted or needed, and then it becomes essential. But I'm not in that business. I'm not here to tell you that I'm Steve Jobs. I'm here to tell you that I think we have an opportunity as an industry to invert the playbook and say, how do we get 1 billion users on chain? We can't expect to bring those users based on ideology. People don't care about decentralization. Mm-hmm. And they don't know how a wallet works or how finance works. And so the reason why my new company is called Inversion is because this process of inverting, you'll hear like Charlie Munger, who was a Berkshire Hathaway. He quotes a German philosopher. It says, invert. Like you should always invert. And what is the process of inverting? Which means you flip the script and you say, how is this going to work? And what can go wrong? To then say, I'm never going to change X or Y or Z. So I'm going to work under the current paradigm, the current set of assumptions, but how do I make it work? And so my view is that we are at an incredible time to onboard 1 billion users in a different way than through an exchange. And so how do you do that? I want to build a better funnel and acquisition for those users. And I go do that by buying a normal business with many users. That business has some costs, fixed and variable, that unfortunately they can't get rid of because they're working under current constraints of antiquated infrastructure.
Right.
Whether it be the financial system or telecommunication systems, there's a lot of really antiquated infrastructure in this world. Like think about it, the modern financial system as we know it is not very modern. It was built on databases that precede the internet. Mm-hmm. Now think about that. The entire financial system operates on sort of a patchwork of systems that have been sort of iterated, but by and large, they're databases that were built before the internet existed.
Yeah.
That's kind of crazy. Now, there's a reason why we haven't really migrated away from those systems. There's some resistance within organizations, there's dependencies, but largely crypto hadn't been around. And so you look at what Stripe has done recently. Stripe, one of the leading fintechs in the world, probably one of the most founder-led organizations, and they realized that you can't graduate, you can't like remove costs if you're working within the current system. You need to break away from that, what is called, like, I call it systemic friction. Mm-hmm. And the way to do that is to go to crypto rails. So they buy a company like Bridge to use stablecoins. Like stablecoins are the 0 to 1 killer product that is going to allow us to onboard billion users, businesses and users. Like having the ability to move money through a stablecoin allows you to cut costs that I call systemic friction in a very meaningful way. Every business, if you've accepted payments, you get charged 2 to 4% processing fees. You don't receive that money on time because Visa, American Express, and the banks will pay you in maybe a week, maybe 2 weeks, maybe a month, depending on where you are, depending how large your business is. So the entire patchwork of like this interconnected Visa networks and like super inefficient.
Yeah.
And so that's really the opportunity that I see, because I care less about investing in crypto native projects now, even though I've invested in, I don't know, probably one of the most active angels in the space.
Yeah.
300 investments or so in Select Verify. Mm-hmm. If you count the ones I've done at Verify, I've pretty much invested and seen most of the teams in crypto. From that perspective, I think that, look, incredible technology has been built over the last 12 years. 4 years ago, we did not have enough proof points that I couldn't sit here and tell you we were ready to go mainstream. Because you didn't have like a high throughput blockchain like Solana or Avalanche, but Solana to absorb all this meme coin activity. I don't have any problem with meme coin activity. It's actually a really good experiment to stress test the network. I mean, heck, when Trump launched a meme coin on Friday night, Solana was able to absorb 20% of all the NASDAQ volume in a span of 2 days. That's remarkable.
Yeah, it was impressive. What are some of these businesses that you're acquiring? Like, what type of business works better for this specifically?
Oh, excellent question. So I've obsessed over the last 4 years since I left Parify, which business can I buy today with the least amount of risk?
Yeah.
So it's equally valid to understand what you don't want to buy. So I went through the process of like, I want to buy a bank because, there were no crypto banks. They all went under or got shut down.
Yeah.
So I don't want to buy a bank. I don't want to buy a consumer-facing business because I'm not going to convince the user to use a stablecoin. They're going to continue to use their Visa or their American Express for now.
Yeah.
So a lot of this evolution has been really refining the thesis, and it's very focused. It's buying a mobile carrier.
Okay.
Right? Asset-light mobile carriers are called MVNOs. They're called mobile virtual network operators, which means they don't own any of the infrastructure like the cellular towers. Their business is to convince you, Mia, to use their plan when they're going to offer you like $20 unlimited. And they're broker businesses. Their biggest costs are customer acquisition and then buying the data from someone that owns like the cellular towers. So long story short, I want to become the largest bank and subsequently largest fintech in the world by transforming those businesses with crypto rails, meaning what I call a crypto-enabled business, not a crypto-native one, because the entire crypto industry is really focused on like exporting the technology kind of to the world.
Yeah.
And that's like takes time. It's time consuming. It's expensive. It takes a lot of effort. Might take another 10 years to do. Like think about it, the internet took like in earnest 20 years to get to this point.
Yeah.
I don't want to wait that long. I don't think we have to wait that long. I think the tech is ready. I think the opportunity to take a business like mobile, like this particular business model, cut down costs using Deepen, and we can go into how that all works.
I can see where your interest in Deepen comes from now. Yeah.
I mean, like Deepen, we need to make crypto relatable. Like the email came along. Back to that example of Bill Gates. Email was that moment that made the internet so relatable for everyone. Why? Because the best technology allows us to do what humans are, which is be social. It's a very primitive thing that we do that other species don't do, which is we have higher cognitive functions and we constantly want to socialize. Email, whether you're a business or a retail individual, you love to communicate. And email just made it so easy to communicate. The telegraph, airplanes, bikes, everything, the most impactful technology allows us to communicate better and coordinate better as species. That's why crypto is so powerful.
Yeah.
And that's what a lot of people kind of miss that point. So by extension, mobile is that killer technology. You live with the customer 24/7.
So throughout all the podcasts, whenever I mentioned Deepen, there was a constant repetition that Deepen is great, but we are like 10 years early or something.
Not at all. Look at what Helium's have. Like Helium is a great example of what's working. Because I'm starting Inversion now, and I always want to hear from people that are super skeptical because I want to pressure test the thesis. I go talk to the smartest telco executives that have never heard of Deepen, and I explain it to them in a very non-crypto terminology. So say, what if I take hotspots, I hook them up to home wireless and have all these antennas. Imagine that I have hotspots all over the U.S. Wouldn't that be a nice thing? He's like, that'll be remarkable. Who's going to do it? I'm like, well, it already exists. He's like, what do you mean? It's like, well, it's called Helium. There's close to 100,000 hotspots all over the U.S. You know that you can use them, right? He's like, what do you mean 100,000 hotspots? We've tried to do this. We got to convince all these people. I'm like, yeah, it's a coordination problem. And then he comes back a week later and says, oh, look, the Helium. It's amazing. Right? What happens now? 2 of the 3 largest U.S. carriers in the U.S., AT&T most recently, are now working with Helium to lower costs. Crypto as a whole, the only reason technology gets adopted is because it allows us to do things faster, better, and cheaper. You know this, right? Crypto is a cost-cutting technology. No one's actually proved it because no one's actually done this. So I just want to do it and show it to the world, which is I took a business like a mobile company and like AT&T is doing it, offloading, which means like buying data from home wireless versus an antenna is way cheaper.
Yeah.
It's like per gigabyte, just not to nerd out on telco, per gigabyte. If you're this type of cell service, you're buying it maybe $2 per gigabyte. So when you, Mia, want to watch this podcast, you're consuming gigabytes, right? So you need to go buy that so that you can see the video in real time. So you're paying $2 per gigabyte in the US.
There
With
was
Helium,
this-
it's 50 cents.
Yeah, there was this theory a few years ago, not even related to crypto. I heard people saying, because a lot of cities started putting like free Wi-Fi, and a lot of places have free Wi-Fi. And I remember hearing this wave on the internet of like, maybe in the future, making calls and using the internet, it's just going to be free for everyone, because there's going to be competition over, if you're on someone's, I don't know much about this, but if you're on someone's Wi-Fi, maybe you give out your data, like some data to be on it. And we do this already with hotels, but maybe this takes a different shape. And if that becomes true, then how does that make money? I mean,
Correct. No, mobile is a terrible business.
Okay.
Terrible business. I would never buy a mobile carrier on a standalone basis. I like it because I can buy a business at a really interesting price. As an investor, I always focus on buying at the right price. Because a lot of times, again, some of our investors, they say, why don't you go buy a fintech company or a bank? I'm like, well, if I had $1 trillion, I'd go buy JP Morgan, but I don't. What about a fintech? I'm like, well, what's a multiple I'm going to pay for that user? If you buy Revolut, Robinhood, 20 times? I'm like, I don't want to pay 20 times for that user. Mobile, I'm paying 3.5 EBITDA. Right? So what can I do? I like that because I can buy an asset that most of the world looks at and says, terrible margins, a lot of churn. A lot of these are prepaid users. They're not subscribers. They're always hopping around, buying eSIMs, all this noise. I'm like, great. I love that because I can buy this business for 3.5 times EBITDA. Mind you, I can buy a really large user base.
Yeah.
I want to build and I want to buy businesses that have massive distribution. I never, ever, ever want to build distribution. This is like a core tenet that we have at Inversion, which is, again, building distribution like the rest of the crypto industry. You want to export fundamentally transformational technology? Good luck. You're likely going to run out of money. The odds are really stacked against you. People don't want to change.
Yeah.
But if you invert the playbook and you say, I buy a business that everyone uses 24/7, you're living with the customer. Then you tell me what is more likely for a crypto native wallet to acquire 100 million users by convincing them that stablecoins are the next best thing next to, I don't know.
Yeah.
Or I sell a mobile company with 100 million users, and then I turn on the lights for them to have dollars in a place like Mexico or Brazil when normal people don't have access to credit, receive remittance flows, and want to have dollars. And they have never been able to hold dollars in a bank account. And all of a sudden, in the app that they interact with on a daily basis, because they need to buy more data, because they're pay-as-you-go, they all of a sudden see that in that same app that they know and feel and their habit is to check daily, they're all of a sudden, oh, wait a minute. I can receive money from my relatives in the U.S.
So what do you think of WorldCoin then?
But look, I know some. I think what they're trying to do in terms of identity is really powerful, primitive, that we can use as a form of identity to extend credit to, I think what they're doing is really interesting and can be used on a number of different ways. In fact, we could use them as well.
Yeah. They're focused on distribution first as well.
Yeah, the story of like every major crypto or every crypto project is that you can use the token to incentivize people to do stuff. Again, coordination via token and some incentive. It's powerful. I almost think of them as like more generalized technology. Now, the interesting thing about a mobile service is that you have access to pretty interesting data on the user to then underwrite credit. Right? By the way, in order to have a SIM, you need to have had to pass KYC.
Yeah.
So you start seeing how this is not a mobile play, it's a fintech play. Because the mobile is just a vehicle and a way to open up a funnel where everyone uses mobile. So you can actually onboard 1 billion users because you can buy more and more of these mobile carriers at a really interesting price. You cut down costs by replacing old infrastructure and using wireless technology and wireless as a data source with these hotspots, which, by the way, every large telco, to your point around cities having this, they already do this. It's just a private network. They own the hotspots themselves. They don't share it with anyone. That's like the dirty secret in telecom, because a lot of people say helium sounds too good to be true. I'm like, no, it actually already works, but it's just the difference between a private network and a public network. Helium is public.
This depends stuff. Most of the stuff I hear is in the US. I honestly, I'm sure you'll have all the information around it. Is there resistance? Like, why is it more popular in the US than, say, why am I not hearing much about
helium?
DeepIn in no, just in general, like all DeepIn stuff, like in Asia? I don't hear people talking about DeepIn.
They've largely leapfrogged a lot of infrastructure. So Asia is actually a market that I like from a stablecoin standpoint, but not from a telco standpoint, because data is super cheap here.
Yeah.
Because they've had to kind of leapfrog infrastructure. So again, this exercise is really narrowing down the markets that we really like. Latin America is a market that I like. I grew up there, so I always want to be in markets where I think I have an unfair advantage, where I know the players, I know the regulators, I know the market landscape, I know the user really well. I have we just hired like a bunch of interns to like literally just from there to do market research, and the user in Brazil is very different than in Mexico, than Peru, than Ecuador, than Argentina. It's very and so, but yeah, I think the telco is a very kind of secretive industry. It's kind of hard to get this data and understand it. But so it's taken us a while to get smart, like what we think is much smarter on it. But like like telco, like the price of data of like mobile services in a place like Mexico is actually really expensive. Yeah, because there's a monopoly, and because there's local players that just have the ability to do pricing power. And so that's like from a kind of competition standpoint, from a pricing standpoint, it's a market that is ripe for disruption.
Very interesting.
Yeah.
AI.
Yeah.
Are you using a lot of AI? How have you been feeling about it? Some people feel it's very dystopian. They're a little bit afraid.
Not at all. No. Look, I mean, I think there's so many things about AI, but I use it on my daily workflow. I haven't hired many. Like my hiring plans are actually like, I can actually just use, ChatGPT or Perplexity or DeepSeek. So the efficiency gains are phenomenal, at least in my workflow.
Yeah.
So it's really interesting. I'll tell you this. I think like AI is the talk of the town. It's all the rage. It's going to be super interesting technology because it allows us to be more efficient. So productivity per employee goes up. You don't need to hire as many people. It has like a very interesting, again, like cutting down costs, like every good technology. AI will allow us to be more efficient, cut down costs, or optimize productivity.
Faster.
Yeah, go faster, right? Any business. So it's going to be huge. But as an investor, what do you want to do, right? You want to be doing things that most people don't believe to be true today, but will be in a not too distant future, not 10 years, because being too early is indistinguishable from being wrong. Like if you're too early on a trend, it's like it doesn't matter. You lost all your money. The company went out of bankrupt, ran out of money. I will go as far as saying that I think crypto is more impactful than AI. Like
really?
Concretely, to allow business to save, certain businesses will be able to save more costs by using crypto rails than AI. It's not to say that AI won't help them, but think about the financial statement of a company: revenue, cost of goods sold, gross margin, then operating expenses, sales and marketing, general and administrative, and then you get the net income, right? There's a lot of like costs in that equation, and revenue, right? So you go in there and say, okay, where does AI make this business more efficient? Well, likely you're not going to have to hire as many people to do sales or marketing. You're going to do it, like the AI agent will do it, or maybe you don't need to hire as many call centers because a chatbot will be able to do that. So like you start removing a lot of costs. Yeah, make less mistakes. You improve revenue, productivity, and whatnot. So it allows you to cut down costs, and then so it's impactful. Maybe 5, 10, 20, 40% depends on the business. Crypto, you're a bank. There's only 2 departments in a bank or a financial institution that have kept growing over the last 20 years since the global financial crisis. There's more regulatory burden. Regulations and compliance are the 2 departments in banks that keep growing. You remove that with crypto rails. Why? Because you're settling atomically.
Yeah.
It's a record-keeping system.
Yeah.
It's almost like you go back to like the Florentine states and like the Renaissance and like days of Marco Polo, of explorers. There's a reason why Venice became the leading kind of financial hub of the world, is because they invented accounting system, like double entry accounting. Venice merchants just had a better visibility into how their business was being profitable, and credit and all these different financial primitives came out as a result of inventing something like accounting as we know it today.
I didn't know that. That's really interesting.
So like if you, and so like fundamentally, like that's what crypto does. Like it just allows you to totally streamline the 2 to 4%, the systemic friction cost.
Yeah.
And I think like, look, everyone I think fundamentally believes that AI is going to be super transformational, and it will be, but no one's really thinking about how crypto can fit into, if you're a business owner, a CEO, a manager, you're not really thinking how can crypto's going to allow me to cut costs in a very meaningful way. Like that just doesn't, it gets lost in the whole meme coin narrative and criticism of the space. But it's very real. Now, no one's done it. This is why I'm starting Inversion, because I want to do it. I want to, if we meet in a year's time, I hope that I will deliver in large part of saying I took a business with 10% EBITDA margin and I took it to 20. And everyone in the telco industry says there's no telco business in the, as we know it, that has this type of margin. Everyone has 10% margins, like, because it's fixed costs. It's like, again, there's these very hard costs that you can't break away because you're working with old infra. And you tell them, yeah. And they're like, what did you do? Surely it was AI. You're like, no, it's just one transformation. And it was like, I took a mobile carrier, I swapped in large part a lot of this reliance on traditional data providers, cellular tower providers, what are called MNOs, and I used a network of hotspots that I deployed in a country.
What other sectors could this work on as well?
Yeah, great question. I mean, I think payments as a general category, like every business is touching payments. You're either using the financial system to pay employees, or you're receiving money from merchants. There's working capital stuff. So there's a lot of drag and inefficiency because you're working in the current financial system with trade, with commerce. So any business that say that you have a bunch of suppliers and employees all over the world.
Yeah.
You're paying them constantly through the current financial rails. That has a lot of costs. 2 to 4%.
Yeah.
Go in there and say, unlike a customer that walks into your store that is still not going to pay with a stablecoin, that's like a very distant future. I can control how I pay my employees and merchants because I could just from one day to the other tell them, hey guys, you're going to have to now accept this. There's no way around it. You want to do business with us? It's with this. You want to get paid as an employee? You're going to have to download a wallet, and we're going to use Stripe, which is, most businesses use today, and we're not going to settle through a stablecoin. And it's super easy. You can convert it to your local currency, no problem. But you're going to get paid faster. You're going to maybe get paid more if you accept this way. Or there's no choice. Like, again, at Inversion, we're a private equity style, which is we control the business.
Yeah.
Because that's a challenge, too. Like, trying to go in there and knocking on the door if you're Coinbase or PayPal and try to convince businesses is hard. Most people, most non-crypto CEOs or whatever, they'll be like, yeah, no, that all sounds too good, but maybe come back in a couple of years once, you've solved this fraud stuff. And what about Terra? What about FTX? And you're like,
yeah.
So, but when I buy a business, I control that. So those are the businesses that are interesting to us, where we can meaningfully cut costs in a reasonably, like a very high confidence interval, that we can go in there and cut costs in a very meaningful way. Now, why just cost? Because you always control costs. When I buy a business, I never want to assume that I'm going to grow revenue 100% because, I'm going to sell them on NFTs or whatever. I sort of assume that revenue is not going to grow, but I can always go in and cut costs. And if I have a very good understanding of how the business works, fixed costs, variable costs, and cutting that with crypto rails, then those are the businesses we really like.
It's definitely an interesting model. I think someone mentioned this to me, that you were doing this, and then I thought about it like differently. I think I give you like a reference what I thought it was. Really, really interesting. So fast forward to a point where, let's say that plays out. You're at a point where you've executed all of this. What does it look like?
Well, I'm the largest mobile company and bank in the world.
What's the What's the time?
And I am the largest chain too.
The largest chain. Okay, that's what I was trying to get to.
It's a fully vertically integrated company in the sense that we'll go buy businesses, we'll run our playbook of cutting costs, and then transforming a mobile company and upselling that user and becoming their bank, right? Because that's how you really get people to use stablecoins. The amount of money that you make as being their bank is vastly more interesting. In fact, to your point around mobile being a commodity, it is a commodity. That's actually like we sell at a cost. Maybe we'll give data. We're very likely going to be in a state of the world where we're going to be giving data and mobile for free.
Yeah.
Because the real value is becoming their bank. The lifetime value of that customer is vastly more interesting when you become their bank. The stickiness of the depositor base accepting remittances. Mind you, Mexico is the second largest remittance corridor in the world between the US and Mexico. Brazil, like the entire region is prime for stablecoin adoption. We will have onboarded at least 100, 200 million users. Like this first acquisition I'm looking at is one of the largest telco companies in Latin America. They have 25 million users. So say I go buy that, or a similar company of similar size, I get access to 25 million users that I, in a best case, can convert and become their bank. That business is vastly profitable because we cut costs and then we make more by becoming a fintech provider, like a neobank and a mobile carrier. Combine the two. That business is very efficient, spits out cash flow. That cash flow, what do? I never want to sell this business. I use that cash flow and buy another business, another 25 million users. And you do this over and over and over until you become the largest bank and largest mobile carrier in the world. And so I said chain too. So I'm going to do all this work. Why would I deploy them in any other chain?
Exactly.
There's no reason.
Yeah.
The tech is a commodity. It's open source. So we will be an Avalanche L1.
Okay.
And I went through this entire...
Why Avalanche?
Great question. I'm not even an investor in Avalanche. I'm an investor in a lot of other L1s and a lot of L2s through my family office, but I ran a RFP over the last 3 months, starting in November of last year, and say, where can I actually deploy and bring all this activity, settlement, transaction fees, swap fees, and so it has to fit current parameters, right? Certain parameters. There's always trade-offs, but look, it has to be high throughput. EVM compatibility is very interesting.
Yeah.
But so Avalanche fits those two. And then sovereign block space. Like Avalanche is sort of allows you to launch your own L1 and you use a lot of the connectivity between other chains. But what's interesting is it's EVM compatible, it's high throughput, super low fees.
Why not, I don't know, most people right now are thinking Solana,
Yeah. Sovereign block space. I don't want to pay and be taxed for activity that's not mine.
Oh, I see.
I mean, why? It's all noisy block space. Again, at some point, you're going to have to compete for block space. There's a lot of noise in there. I want to create a very purposely built, vertically integrated chain that supports all the businesses that I buy. Now, it's permissionless. So I can have all the different other activities. Anyone can come and deploy in my chain, no problem. Like Base, I'm not going to control what gets built in my chain or not. It's not sort of like that. That's so crypto works. But starting from scratch and having this sovereign block space be very opinionated allows me to fill that block space the way that I want it. And so I don't ever want to pay more than I need to for block space. So that to us is most compelling. And also just as a team, they're very much focused on enterprise use cases and that's how we think of the world. Again, I'm not saying that Avalanche is the best of all. The problem you might in this chair, a lot of these L1, L2 founders might come and sit and they'll tell you, most of them make the mistake of telling you that they have the best tech, which is sort of don't treat your customer base dumb, as if they were dumb. There is no unequivocally best chain out there. The question is, invert and say, well, what are you optimizing for?
Exactly.
Bridging is not my use case because I talked to one of the CTOs of a really good L2 and he's like, you made a terrible mistake. I said, what? He said, what about bridging? I'm like, well, what about it? He's like, well, bridging's really good, but in our tech and zero knowledge and all this stuff like ZK and all this stuff, I'm like, you're totally right, but you fundamentally don't understand what I'm building. Just my user's not going to leave my chain. Like
what I thought when
like,
you said that was like the sustainability, like long-term sustainability of the chain.
again, like every chain will tell you they have the highest TPS and the lowest fees. Everyone somehow manufactures the best metrics. I do think that there's like a few high throughput chains that credibly can support and absorb this. We're like never going to know until we onboard like 100 million users. You know,
Right.
how many active users do you think we have in crypto today? Actively like using protocols?
Oh, I think someone gave me this answer recently.
Give or take, just maybe
300 million or something.
30 to 60 million.
30
to 60 million. This is like a A16. Anderson Horowitz puts out a great report. They kind of like roughly approximate this.
Oh, it's way less than I thought, like 10 times
You
less.
you think we can reasonably look at any measure and say that these networks are worth 250 billion or 10 billion or 30 billion or 100 billion? Absolutely not. We're all sort of are here sitting that someone is going to fix the problem that we have as a crypto industry, which is everyone that is doing, of those 30 to 60, all of them are doing one thing. They're coming through an exchange. Problem number one. Problem number two, they're only doing one thing, speculating. So what happens? The retention is terrible. So
Right.
the archetype, the user journey is kind of like fundamentally broken because the president launches a meme coin. Amazing. I want to buy the presidential coin. How do I do that? Log into Coinbase or whatever, create an account, fund it, which is kind of easy now. So you get like
A lot of people was through like fintech apps and stuff.
No, that part's great. I think we've solved a lot of those issues and bottlenecks. Some costs there that I don't love that we will want to fix. But yeah, 1 million people came and bought the Trump coin that day. It's a lot through MoonPay and a few other Slingshot, a few other apps. How many of those people do you think stuck around when the price did that? A Burj Khalifa. They went to 75, went
Burj
back
Khalifa.
I mean, there's no retention. Like I come from a world of investing in enterprise software. You live and die by unit economics, which is like, what's the retention of that user? I mean, it's kind of broke. That's what's broken in crypto, which is we're really good at activating people through speculative energy, capturing their attention, selling them on the dream. The problem is prices are incredibly volatile, and therefore that has a high churn. Most people leave. They hate the industry at some point because they lose money.
Yeah.
So yeah, concretely, like what is so different about my chain relative to other chains that look in their own right, they can exist and there's no problem. Like, look, I'm an investor in a lot of them. I want them to work and I think it will work. Fundamentally, the user that I bring to the crypto economy has never existed on chain. It's a user that doesn't care if Bitcoin's at 100,000 or 20,000. It's a user that at a minimum is using a core service called mobile, doesn't even care, understand. Like crypto's invisible.
It's truly abstracted in this
And
case.
I'm not selling them a stablecoin. I'm calling it a dollar denominated bank account.
Yeah.
And maybe you can earn some yield on it. You know what I mean? Like it's totally invisible.
This is really interesting. Santiago, give me some predictions for this year.
Well, other than what I'm doing, and I hope I can deliver on that and execute on that. I mean, I'm sort of putting myself a gun in my head, which is in the next 12 months I want to do this. And I want to go to not a crypto conference as much as I like the conferences. I want to go to a trade conference. I want to go to the telco conference where all the executives that don't know about Helium today or maybe starting to pay attention and tell them, hey, listen, I took this business and I have the best mobile company in the world by margin. And they're all sitting there and saying, wow, I kind of want to do that.
Yeah.
And you really want to do, like, you really want to make a splash in how crypto can fit. You want to make crypto relatable. The tech is ready. We just need to go about it in a different manner. And I hope I can do that. You know, that to me, I care less about coming to these conferences as much as I like seeing my friends and coming here.
Yeah.
I do want to go to Harvard Business School. I want to go to the trade conference, the fintech conference. I want to go to the mobile conference and say, guys, this is how crypto fits in your business model. And yeah, AI is interesting, but don't neglect crypto because it will allow you to cut costs, not in a 1% to 2% manner, in a way that no one else has been able to do. And you always want to do things that no one else is doing because everyone talks about competitive advantage.
Yeah.
Everyone's doing AI.
Yes.
Everyone's hiring AI consultants. It's going to be good. But real value and wealth gets created when you do things that other people are not doing, but eventually will be doing over the 2, 3, 4 year time frame.
So predictions?
Prediction, I mean, in terms of price, in terms of industry?
No, just something that might happen within the year.
Yeah. Okay. Well, I'll ramble a couple things really quickly. Stablecoin legislation is going to come faster than most people think. That's massive. Like U.S. Stablecoin legislation, be huge.
Okay.
That's going to come in the next couple months. So that's going to be really impactful to convince businesses to start using stablecoins.
That's great.
Pay attention to a couple companies, Robinhood and what they're doing with tokenized stocks. Pay attention to what BlackRock is doing, obviously. Folks like Apollo, I know you have Tarun, but like Apollo and what they're doing with like credit and RWAs. What else am I paying attention? Other companies that I'm paying attention to in the public markets, Nubank, the Brazilian fintech, largest fintech, one of the largest fintechs in the world, backed by Warren Buffett, actually. 100 million users. They have a wallet, they have a MVNO, a mobile carrier, and they have
Okay.
Pay attention to their public filings because you want to know, like, an interesting tidbit. I'll leave you with this, which is they have a wallet. Most of the users there are not buying Bitcoin, Solana, or meme coins. They're buying USDC.
Okay.
So pay attention to that. Pay attention to PayPal. They have their own stablecoin. I think as a if you're in crypto, you want to understand and gain alpha. I think it will pay. I think it will serve you well to start paying attention to public companies and their disclosures and what they're doing in crypto and their strategy, because there's a lot of really good stuff. Remittance players, Western Unions of the world, Zoom, PayPal's. Pay attention to the fee that they're charging users, what they're doing, because that goes to zero. And so I'm not advocating to short companies, but it just pays attention to, because there's going to be a lot of disruption. I think like the last thing I'll say is like it's interesting to come to a place like the Emirates, which is I think like at the forefront of regulation and being pro crypto. I think that it's an interesting time in the industry where I actually think in my conversations with people like non-crypto natives are actually more excited about crypto than crypto natives. Like crypto natives are like kind of frustrated because prices are not going like refresh, like it's not moving.
Yeah.
But executives and companies are truly now in large part because of BlackRock and some of these companies, they're really interested and motivated because they're paying much, much more attention. I'm not here to say this time is different because we all have heard like public companies use blockchain to pump up their stock prices. But I do fundamentally think that like because the technology has come a long way, because regulation, a lot of the hurdles that we've had as an industry have gone away.
Yeah.
This time is fundamentally different.
Yeah. Here, there's a lot of excitement about it. Everyone wants to integrate it like at a big scale.
Yeah.
No more predictions. This is all.
I don't know if you want me to comment on anything, but no.
you could keep going. You mentioned stable coins, paying attention to these large fintech companies.
Yeah.
What else?
Pretty much a lot. If you're a large player and a lot of financial institutions likely are going to launch their own stablecoin. So that's going to be interesting. So the amount of stablecoins in circulation probably like 10x's from here.
One broad advice for everyone in the industry.
Well, I don't give advice, but if I had the opportunity to go back and tell my younger version of me that got into the space in 2012, like, hey, what would you have wanted to know that I know now? Probably use stuff go ahead and use this stuff, not just crypto stuff. Go and open a bank account and focus on where is the friction. Everything that you do in the day, it requires two things: speculation about you thinking about something, which coffee, which should I take an Uber, should I walk, it's all these decision trees. And the other one is friction. Everything has friction. Yeah. Installing this thing, this setup, coordinating with the organizers here, paying them, walking down the street, ordering an Uber, everything has some amount of friction. And I think if you want to be a critical, shrewd investor, you focus on, okay, how can I make this better? Again, in the classical sense of inverting, and I'll never get tired of saying it, how can we make this more efficient? Because that's where you start thinking about, okay, who's going to actually displace? Where's value going to really be created? The other thing is be cautious when you hear a lot of people building in really transformational tech. They'll be like, there's a traditional Web 2 company that has 100 billion market. Mm-hmm. And we're attacking this super massive market. I'm like, yes, but sometimes this truly disruptive technology collapses those costs, and those costs are not going to come to you. If you're making something more efficient, And that's a lot of like the slides and pitch decks you see, which is like, we're attacking $100 billion market or a trillion market. I'm like, yes, brother in Christ, but those fees are going to go to the consumer. Like the consumer's going to benefit. You know what I mean? That doesn't mean that you're going to capture that revenue. So that's like a couple of things. Like it's like common sense, I think.
Yeah.
The product market fit is, I guess another prediction is the era of airdrops is long gone.
Okay.
Yeah. We've used airdrops as a way to like abscond the fact that we don't have any product market fit beyond speculation. So you throw airdrop and to decentralize for the sake of not being called a security, which is nonsense. I think you start seeing more of securities by crypto companies. There's nothing wrong with being a security. It's sort of taboo, but I was just on a panel with Evgeny from Wintermute, and we're talking about like this, like market integrity. Like if you're like, that's all the regulator cares about. You care proper disclosures. Every team discloses the same amount of information at the same time. The market therefore has more integrity because if you're buying or selling, you have access to the same amount of information as everyone else. You know the team wallets. Are they selling? Are they buying? Are they everything? And so I think we need a proper repository mandated at a regulatory level that creates fairness in markets. And that's the only way we're going to grow and be taken seriously.
Yeah. Really interesting.
Yeah.
For everyone watching, where can I find you?
Well, I'm very much building in the open. So if I fail miserably, then you'll very much know because I'm like not afraid of documenting the journey as a founder too. So that you can find me on Twitter, Santiago R, and that's probably the best way. We are hiring a bunch of people.
All right.
So if you're interested and excited, if this touches a nerve and you get jumped out of your chair, or if it puts you to sleep, then I also want to talk to you because I've done something terribly wrong. It's funny because I've hired 2 people and then I have like 6 interns all across Latin America. The 2 people I've hired, full-time employees, they all told me that they didn't, like when they heard about it, they're like, I'm not interested.
Yeah. Then they changed their minds.
Yeah. A+ people. So I'm only looking to hire A+ people.
Yeah, that's the way.
Yeah.
Santiago, it's been a pleasure.
Thanks so much for having me. Yeah, I appreciate it.
Proof of Talk.